at the InsurTech task force at EIOPA. There we are working first of all to clarify the concepts, to issue more papers about big data, about blockchain, about artificial intelligence, deep learning, because first of all, people should understand very well about what we are speaking. Because a lot of time these nice innovative words sound well, but it's a quite far distance between a word and what happens in reality or what is in the back. And I spoke before about artificial intelligence. When we are speaking about to train a network, the main ethical issue is about biased practices. Because if you are learning a network in a way that the insurance company wish to obtain more profit, it's in the detriment of the consumer. And how the network is trained is very important and should not be biased by the trainer, because other way is not fair to the client, to the consumer. So this is an example of an ethical approach. And also EIOPA, separately of this task force, has an digital ethic committee group who is developing policy there, covering all these aspects of ethical aspects of artificial intelligence, and in general, what means innovation, digital transformation.
Yeah. Okay. But one of the main concern regarding to the ethical issue, actually, it's attached with the basic principle of the insurance mechanism, and this is
just
of risk. Okay.
One word, we are experiencing technical difficulties and I'm technically no longer the host, but Belma is here with us and we should give her the floor for her presentation.
Okay.
So the alternative host will do that and then I will probably switch back into my role.
Okay.
Sorry.
No problem.
Okay, thanks a lot, Dano. Well, I'm just gonna make a shorter presentation, even though I wanted to have a much more slides, but to tell you the truth, the Bosnia is the really beginning stage of digitalization in all sectors, in all areas. So just in short about the digitalization, I'm just gonna say in short about the digitalization in the insurance sector, insurance industry in Bosnia and Herzegovina.
Would you like to share your screen, Belma?
Well, okay. Hold on. I just want to open the presentation.
Hello.
Hi, because I just turned my camera on and I was looking where everything is. So, okay, sorry for that. Okay.
And you can share your screen so we can see the presentation.
Sure. Some things are on the slide, but I'm just not gonna go all through them. Can you see it?
You can go to full screen if you like.
Yeah. Can you see it? I hope
yes.
You can.
Thank you.
Okay. So at the beginning, just in a couple of words, but you all are familiar with that the technology did change the way the companies start doing their businesses and deliver the products to consumers in many sectors, and especially insurance sectors, insurance industry, because of this, the technologies are smarter, faster, and much more economically viable. And to establish competitiveness, ensure the economic progress of the country, we know that the key in that is the development of information and communication technologies. As I said at the beginning, The Bosnia is really at the beginning phase of digitalization in all the sectors and segments of development on information and communication technologies. Well, when going through a couple of surveys and reports that we have in the country and in our agency, we can see that insurance and reinsurance companies did bring some numerous advantages and also potential disadvantages in this area of implementing or taking the steps into for the digitalization in the country. Some of the advantages that were mentioned is the catastrophic risk management control because of the chances of being able to create inaccurate models for predicting catastrophic events. Big data analytic tools, even though many countries probably are using it 90%, we are still at the beginning, but we have actively like 30% of the firms or the agencies that are using the big data analytic tools for in their work, and there are like 20% of them that are in the concept phase for starting to use big data analytic tools. They're mostly, those models are mostly used for pricing and risk insurance. Cloud computing service, which is like a key factor for data agility and the analytics. We have like 30% of the insurance companies that are using it, and some additional 30%, 34%, may I say, they will move to the cloud computing services probably in the next couple of years. The disadvantages that were kind of pointed out in our country were for now at this point is the increase the costs of insurance and reinsurance, which is basically due to the need to invest in the educating people, as well as the purchase of hardware and software that will accelerate the implementation of the digitalization in the insurance industry. The increase the risk of copying the business models. Basically, that's how fast are we able to use and implement the new forms of technology to compete with other insurance agencies. Basically, for the competition, it's very a great risk. The great exposures to risks are at this phase are the cyber risks, then the possibility of making erroneous conclusions based on the analytical data that we have while doing the digital data processing, and the resistance of certain segments of policyholders, especially the elderly people. One of the key disadvantages we have in our country, probably in the Balkans too, because of the mentality that we have, is the absence, is that the problem of maintaining and managing relations with customers because of the absence of personal contact in sales. Because we usually like to have all things live, not through the digital not through the digital services. The digitalization in insurers, rightly, there is a chance of having of buying insurance policy online. The green card has been also digitalized, and now we can have it received by email, or we can print it on a paper and have it on our phone. While a year ago, we had to go to the insurance office agency and get the paper, which is really a green. Now it's even simpler. Then we have some insurance agencies have launched the Viberbot applications, where most of the things can be done through the Viber applications, where you can buy health insurance, travel insurance much faster than to go to the office or the agency. Then there's a possibility of the web shops. Many of the insurance agencies have web shops now, and which is easier, like it gives us a like a shorter, well, we can save time for in the chances of buying and paying for the insurance. While online sales in our markets are still developing, the pandemic did bring did draw the attention to this type of well, doing this type of possibility of doing businesses. But there's we are still in our country, we are still kind of in a typical sales, and the new new distribution channels are very hard to accept. So the branches as the oldest sales channels and direct contacts are still the primary and standard ways of contact and sales in our country, especially insurance sector. Uh, Practice, well, as I've mentioned at the beginning, the insurance policies can be purchased through the web and mobile applications now. The insurance collect data on potential customers. So we have it through the social networks, using certain predictive tools to anticipate the needs of the consumers and customers, so they can have so they can offer them a better product. E-policy as a classic insurance policy in Bosnia and Herzegovina is not possible to have an e-policy for car insurance yet, but the e-policy for life insurance and other types of insurance are provided by insurance companies in Beha market. I have to mention that the digital tools are still insufficiently used in our country. Well, the possibilities of online reporting of damages and checking the status of claims processing is one of the services, that Beha insurance companies can provide to their clients much better using the digital tools. Well, I just had to mention that. Insurance, oh, the insurance offers can be contracted through the web platforms and the other smart devices, which allows customers with less time spent and without without coming to the branch. And it's not well, that's the possibility now that's offered to our customers, because it shortens the period for claiming damages and achieves other benefits for other users of insurance services. Other positive examples is that in Bosnia, customers are offered now the possibility to get like 10 to 40% discounts on the purchase of travel insurance or property insurance if they are bought online. Then well, the the Beha market consumers are not, well, I have to mention that they're not adequately informed with the benefits that they have from the insurance companies if they use the online, if they buy policies through the web online shops because of the discounts that they have. In the conclusion, I have to say that to improve the relations with end users and increase the level of use of digital tools for providing insurance service in insurance companies in Bosnia, the insurance companies should be more agile to promote the benefits of using digital tools for policy holders, especially by applying omnichannel marketing like we have in the case of banking systems. Well, one of the reasons for that is that the mentality of people in this area is different than in other countries of the Western Balkans. It will take a long time for people to start using the methods of buying insurance policies online through the web shops, because we are used to doing things by direct interactions with agents, because it's something that's kind of like more acceptable in this area, especially in our country, because we usually have like thousands of questions, and we want to have the immediate answers before we do things or buy policies, especially policies. And when we are doing it online, it's totally different. So people are kind of they will rather not buy it online than than they would rather go to the agency than buy it online. Then there's another thing that people still need to gain the trust in insurance companies. They still feel insecurity and mistrust, and there are a lot of issues that policy holders can get in direct contact with the insurance agents. That's from my side for the beginning, because digitalization is still very, very at the beginning phase in our country. So if I can provide you any more information, I would be glad to.
Thank you, Bema. We are exactly on schedule. So I would like to invite the panel members for brief remarks if they have any, because we have next presentations waiting. Thank you.
You're welcome.
You should maybe mention that looking now to the conclusion about digital transformation of insurance company, but in general about all companies, sometimes we are speaking about heavy innovation, but the companies are not having basic IT functionalities. So we are speaking about data and how we are training network, but the data in the databases of the companies are bad, and the quality of data is weak. So I don't think that is good all time to speak about innovation with for the sake of innovation, without a thing that first of all companies should have an IT framework, solid one, correct one, with correct architecture, correct services inside of their organization and for clients, and after that they innovate. And I think what this is can be also on risk, ethical risk, and finally it's an operational risk on the side of the market when we are trying to innovate without have a real good IT infrastructure in your back. Because starting to digitalize and to transform a company from a paper-based to a digital one, but if you are doing in a bad way, the services will be also bad, will not be better. And a lot of times we are trying to innovate or to digitalize, trying to escape from problems, but in fact the problems will be more deeply. This is another aspect that digitalization, innovation should be taken in consideration. So also from at European level, if you see now it appeared DORA. DORA is coming with exactly this operational, technical operation, infrastructural aspects that the company should implement to be resilient, to be solid one.
Okay. I will add something related with the Kalin comments, which fully agree with his comments, and it was also my experience working in the Insurance Supervisory Authority in Macedonia, that the companies were not ready by themselves in having efficient informative infrastructure or software solution for their everyday business operation. but that will be also valid for the supervisory authorities, that also they should implement their, let's say, not subtech and regtech technology, but to have fully comprehensive and effective software solution for the supervisory needs. And this effective solution can be in favor to follow the solvency position of the insurance players, producing early warning system, indicators, and many other effective tools. So therefore, the supervisors, because now we are talking about regulation and supervision, by themselves, they should be digitalized, and then in parallel to send a message by imposing legal requirements by publishing bylaws or other recommendation to the insurance industry in order to be more effective in terms of IT software solution. Those are my final comments.
Thank you. Thank you, everyone. I believe this concludes the topic. So after 1 or 2 minutes break, we'll introduce the next topic in this room. Thank you.
Thank you.
Hello, everyone.
Hello, everyone.
Hi, it's my pleasure to say hello to Mr. Boris Gruzdanov, who is CEO of KaiSec and also my old friend from high school. And before he starts, I would like to, because I think I definitely owe it, I want to apologize to the audience about the technical glitches that we are experiencing from time to time. But you see, one of the side effects of digitalization and globalization is that it's quite unpredictable in certain cases, especially if you take into account the fact that the event is prepared in Sofia and co-managed in Serbia, in Belgrade, and goes through nobody knows how many servers all over the world. So we're doing everything in our effort, in our power to minimize all those technical issues. But I really beg for your patience in certain cases. Now I would like to give the floor to Boris to continue his presentation.
Hello, everyone. Thank you very much for the invitation, Deso. It's a pleasure again to be here. Let's try and see how the screen share would work. Just a second. Okay.
It's visible. It's
visible. Is it fine? Should
yes.
I make it full screen or it's okay?
No, it's perfectly okay. It's okay.
Okay, good. So how much time is that there? So 10, 15 minutes tops, right?
Depends on your will, but approximately the maximum amount is 25 to 30 minutes because the next module comes in.
I'll be much shorter than this.
Okay.
I'll do my best. Okay, so first, I would like to mention that I'm definitely not a professional in the field of insurtech. That being said, however, I believe there are cross points between the areas I'm working in. Recently, this is AI, blockchain, and also security, digital security. So I believe the topic of my presentation today is quite relevant to the insurance domain, which is tightly bound with the general financial domain. And I believe in probably more cases than less, the threats and the defenses I'm going to talk about, which come from the field of AI, are quite relevant to the insurance domain per se as well. Okay, so the topic for today is AI and financial security. Let me just make a very short presentation of me for those who we haven't met with so far. I work in the field of AGI, or development of general artificial intelligence, on an academic level and research level, and on business level. I'm the CEO of a company which deals with developing AI, blockchain, and quantum safe solutions for the state and the business sectors. Now, one of the hot topics in finance today, although a very different finance than the one we used to know before the mysterious persona of Satoshi Nakamoto appeared on the digital stage, is blockchain. And as we are witnessing it today, blockchain is virtually taking over novel domains of the global financial scenery than before. Today, blockchain is not only a backbone for the cryptocurrencies like Bitcoin or Ethereum or any other crypto coin which is out there. It is being implemented by the big financial players which never ever intended before to have something to do with blockchain technology as presented by the cryptocurrencies. We're talking about financial players like national banks, like the Bank of China or the European Central Bank, or US banks and the Federal Reserve. We are talking about financial players like Visa and MasterCard and many others. So what we are witnessing today is the blending of the traditional financial ecosystem, which is global, and the novel architecture backbone of the cryptocurrencies ecosystem, which is the blockchain. And typically, blockchain and AI are two of the hottest words in the digital world today, but less often than more often, they're used in a sentence together, which I believe is a vacuum which has to be filled in, because AI and blockchain are related. and in a non-trivial way. How come? Well, there's more than one direction for this blending, but the most obvious and the most current one, which attracts a lot of attention, is the emergence of digital fiat money. For example, and they are typically regulated on a blockchain architecture. We witnessed several months ago the emergence of the digital yuan. The European Central Bank is talking and developing a project about a digital euro. The couple of US banks are together with MIT, I believe, are developing prototypes for a digital dollar, and many other countries are working on their own projects as well. Now, the points of contact between AI and blockchain technologies, whether it regulates traditional cryptocurrencies or novel digital fiat money, is data. That's the main cross point. It's not the only one. Now, blockchain, especially in a rich financial field, imagine transactions of digital yuans or digital dollars or digital euro written in one or another blockchain architecture. It's an immense amount of data. And as we know, the only player in town which is able to deal adequately with big data of the perhaps lesser amount than the big data in IoT domain, but still an enormous data, and big data in finance is going only to grow in all estimations. The only player in town who can deal and cope for many tasks in this domain is AI technology. Now, I don't have time and frankly no desire to delve into differences between deep learning, the varieties of AI, sometimes justly called AI, more often than not unjustly called AI. But at the end of the day, whether it's a machine learning algorithm, whether it's a deep learning subspecies, or eventually one day a much cleverer AI capable of logically semantic reasoning, which we don't observe as of now, would be able to cope and to do tasks, to perform real-time tasks like big data analytics, big data pattern recognition, big data decision-making enabling. So AI is non-trivial for the proper functioning of the financial ecosystem of tomorrow. And when we talk about data, we should always bear in mind that security is critical when it comes to data. Now, I have to apologize, but I have to kick out my dog from here because it's making noise. I'll be back in 1 second. Sorry about that. I apologize about this. Now, we continue. As I mentioned, more and more countries and corporate international agents like Visa and MasterCard, among others, prepare to transition at least part of their work and business on blockchain technology. For example, I mentioned the digital yuan, digital euro, and eventually a digital dollar. As we can all more or less easily imagine, the emergence and the introduction of digital fiat money globally would change not only the structure and the dynamics of the global financial ecosystem, part of which is the insurance domain, but it would also change the security reality when it comes to the whole financial system. And there is another cross point between AI and the finance of the future, blockchain or not blockchain based, but still digital. And this is security. Now, I would like to start with some positive news when it comes to the digital fiat money reality. It's not all negative. Let's start with the positive. For example, the actual couple of reasons why digital fiat money, typically blockchain-based, would be adopted in the first place, and we see it happening as we speak in a country like China, and not just China. Digital fiat would provide cheaper, faster, and much more practical alternative to international transactions outside the today's global financial system. Now, there's going to be a transitional period, obviously, and eventually digital fiat would be probably in most cases, but for example, China would be a different scenario, would be adopted and naturally blended within the existing fiat international financial system, but they would introduce new practical benefits for the users as well as to the corporations like Visa and MasterCard and big banks, international banks, as well as central banks and states. So business would change. Settlement times would be nearly real time. Price for a transaction would be enormously lower, and others. It would be one click away, what previously took hours and sometimes days. Now, eventually, it's not unreasonable to expect that digital fiat would boost the global money flow, not just local money flows, due to practical usability. And hence, another good news is that due to this increased dynamics expectations, we can also expect to boost sectors, financial sectors like retail portion of the economy, and perhaps not only retail. However, and this is the beginning of the more negative part of the analysis, increased flow of digital fiat would be better protected if devised cleverly, however, not a priori, against problems like fraud, tax detection, tax evasion, money laundering, inflation, and counterfeiting. For example, just a second, I have to stop this. I apologize. Apologize again. Now, this would help to stabilize crypto markets and forex modern digital fiat markets of the future, because they'll have really fast and easy accessibility. They'll have immense volumes as the volumes we see today in crypto exchanges, and immense liquidity. Now, Just to give an illustration about the project of the European Central Bank for digital euro, and this is more or less taken and an excerpt from the website of the European Central Bank, if I'm not mistaken. Now, this is what the European Union says. The digital euro would guarantee costless access to a simple, universally accepted, safe and trusted means of payment. The digital euro would still be like a euro, like banknotes, only digital. It would be an electronic form of money issued by the European Central Bank. A digital euro would not replace cash, but it would complement it. Now, here I have a small comment. Yes, in the beginning, of course, it's not going to replace cash, but it's not unimaginable to forecast a quite close future where the cash, the physical cash as we know it, would simply die out, and the whole world would begin to use only digital fiat money. That's quite thinkable and quite probable. The only unknown is when eventually it's going to happen. And another benefit is that the digital euro is expected to be just an additional choice about how to pay. Again, I have a comment that eventually within the European financial ecosystem, the digital euro would become the only way about how to pay. By mere preference, people would prefer, due to usability and practicality, to use digital euro and not cash euro. And the same principle holds for virtually any other expected digital fiat money. Now, when it comes to the digital dollar, it's slightly a bit different. For example, nobody disputes that an eventual introduction of a digital US dollar would fundamentally change the way the US dollar is used, not only in US, but globally. And ironically or not, but many banks in US, if not all of them, but many, view the project of the digital dollar as a threat to their profits. And on the other hand, payment companies, big international players like I mentioned before, Visa and MasterCard, they work with central banks, so the new currencies can be used on their networks. We can imagine the profit and the market share each one of these companies and others in the same branch would bite using high liquidity, cheap transactions or virtually free transactions, immense real-time speed, and many other digital benefits. Now, what is not clear, and financial security experts are quite worried about this, is how an eventual digital US dollar would interact with the existing global payments network. However, what we have to keep in mind that the previous and I believe the current US government is committed quite significantly to digitizing the US dollar. So this is going to be a game changer for a lot of financial sectors, like, just to give you a small illustration, the oil trade, the global oil trade, all right? And let's mention a couple of expected negative effects of the new digital fiat money reality. Imagine a really well-devised crypto algorithm of the kind that the Monero cryptocurrency employs, but only better. And such crypto algorithm, which would constitute eventually the backbone of at least some of the digital fiat money, would create a reality of practically untraceable money flows. We see a taste of this for quite several years up until now in the quite real case of the dark web. Transactions in the dark web in the beginning shifted from fiat money, which were only cash money, whether escrow, whatever, bank payments or cash, in many other crazy ways of evading traceability by authorities, international and local. They adopted Bitcoin. And then after it became clear that Bitcoin is not nearly as anonymous as people for a while believed it was, they switched to Monero, which so far is considered much more anonymous capable than Bitcoin from the top 100 crypto coins in the world. Now imagine a really anonymous blockchain regulating fiat money, certain state fiat money. Now, I'm not saying China, but you can have your pick. And this would change an enormous amount of the global financial, not just market, but reality of transactions. It would render it impenetrable and untraceable for authorities, be they banks, trade banks, central banks, states, or international organizations. Well, this is a vulnerability which might be, and it would be used by criminal organizations, totalitarian states, terrorist organizations, unorganized criminals, whatnot. And this is a serious new vector of threat which has to be considered, especially at the time of coming up with the concrete technology of the blockchain. Now, it's more or less clear that even without such anonymity, digital fiat money would weaken the traditional and standards ways of monitoring and controlling the global financial system. And again, let me remind you that the expectation is that eventually in the digital financial, well, it's in a way a reality, but the expectation is that this reality would become much heavier and much bigger, larger, that the huge chunks of the global financial reality would simply be inaccessible with not only with traditional means, but with modern means. And we have non-trivial players here, one of which is AI. And I'll talk shortly about the AI role in this threat scenery, but also modern encryption, quantum safe encryption, because as I mentioned in my previous talk in November, Deso, if I'm not mistaken, or October, quantum safe or new gen encryption is going to play a highly non-trivial role in securing not only the backbone of digital money and of course cryptocurrencies, but of IoT, everything digital, because when we have the old 95% asymmetric quantum unsafe encryption all over us, this phone, the computers and everything, and when you have a malevolent players like totalitarian states or criminal groups, recall the crypto attack, the encryption ransomware attack from yesterday or the day before yesterday on the east coast of US petrol pipeline. This is just a taste. It's just a taste of the potential of these vulnerabilities, and the global society needs to come up with two-part solution. First, to develop a technological protection, which is highly non-trivial, and second, to implement these types of protection in time, because in a way, any month being late opens the door for unacceptable and potentially really grave danger, not just for the financial sector of the global society, but also for critical infrastructure and for the all sides of life of people all around the world. Now, last but not least, digital fiat would change the game for financial intelligence, and we have to be aware of that. Now, AI has at least two-part role in this newly evolving digital financial ecosystem of tomorrow. One is the negative role, or how can we use, or how can somebody use AI tech in order to bring about some of the threats I mentioned earlier. And the other role is a positive role, or how can we use AI technology and deep tech technology to prevent and defend against threats like the ones I mentioned before, and many others. Now, I'll just give you a very short list, by no means exhaustive, not at all, how AI can be and is actually being used as we speak for attacks and compromising financial security. For example, the crypto trading bots and other AI-run trading bots, whether it's a stock exchange or probably in insurance, although I have no information so far about such implementation. Perhaps some of the specialists in the area might give us a bit more details about the role of AI trader bots in insurance segment, needs to be trained on a lot of data in order to be successful. Now, people who deploy bots like this typically are only customers of the companies which develop the bots. And if you don't know what you're buying, you're effectively making a jump of faith. So you trust that the company which sold you the AI bot is a benevolent company which has the best in mind for your trading business. And that's not always the case, right? We have malevolent agents, and I'm not talking only about state actors, but we can eventually get the conversation down to the level of mere competition. Mere competition. One corporation takes over or ruins the business of another company by devising a secret operation of selling them an AI trading bot which is able, following a sophisticated algorithm, to simply ruin the business, so that the attacker company or a state, the principle is the same. AI ironically does not discriminate. They'll just bite a greater piece of the market. So we don't talk here only economic warfare, state actors and terrorist groups and criminal groups. No, we're talking about competition, and that's scary. Now, one way you can devise such warfare competitor bot is by data poisoning. It's a relatively novel technique which effectively is training the bot on deliberately poisoned data. So it's not real data, it's as close to real as possible while delivering the poison to the trade suggestion of the bot, which would ruin the business of your competitor, okay? Another much more popular approach is to use AI to create fake identities. Now everybody is laughing. We're laughing when we see the deep fakes, right? Hollywood actors, presidents saying things which are not expected by them. Turns out a couple of hours later that they're deep fakes. These are AI generated fake identities of people in key decision making positions, or even yourself. It's a huge problem, obviously. Now, another species of vulnerability which is being large open by an AI technology is the so-called deep attacks. And this is a very novel type of attack, still in its infancy. It's an attack which has been devised and discovered by an AI system. Now, to put it in other words, is an attack which we humans were not clever enough to devise, and we delegated this task to an AI system to discover vulnerability and to devise an attack, whether it's an attack on a financial system or any other type of attack. And such deep attacks are anything but trivial. And obviously, the only way to defend against deep attacks is again by using AI tech of the kind and of the scope and of the structure which devised the attack in the first place, whether for prevention or for defense. Another point of vulnerability, really extremely serious, is financial terrorism. It can come in a variety of flavors. One of them could be an attack devised against the national fiat system. Remember, fiats they seem to be going digital, and then you can lead attacks towards digital money that were not possible to be waged against cash in my pocket, because cash is physical and digital money are virtual, they're digital. Now, again, the only way to prevent, detect, and defend against digital finance terrorism attacks is by using cleverly, aptly, and timely AI technology of the highest grade before the malevolent actors. Okay, now something which is today considered a bit more exotic, but I don't share this opinion at all. It's the quantum AI platform, which would be able to do a variety of tasks in a way unseen before. For example, to break encryption of some kinds, or to come up with breaking algorithms of the kind of the infamous now Shor algorithm or Grover's algorithm, which run on operational systems that run on quantum computers. Now, this is coming fast. It's coming fast, and states and business, not to mention the global and local financial sectors, insurance including, should have prepared yesterday. Actually, today's late, I think, but better later than ever. And a last touch, AI in financial warfare between state actors, typically. Now, imagine financial sanctions of state A against state B. Now, imagine what would be the access of one state towards the money, of the digital money of the other state, if the money are all digital, right? Now, it's going to be a different world, and we need to prepare yesterday. not today, yesterday. We are late. We are being gravely, gravely late. Now, I mentioned a couple of the pluses of AI, but let me just give you a couple of other more optimistic implementations of AI in the realm of financial security. Now, for example, of course, we can use, and we are using AI technology, but just not at the pace that we need to defend financial systems. We can fight deep fakes with AI and only with AI. We can perform real-time monitoring for malicious behavior in events. We can use AI tech as a powerful anti-money laundering tool with the small detail that in order to be able to use it as an AML tool, you need to have access and data. Of course, banks are one of the pioneers, and I don't mean that much central banks as trade banks. They use AI tech as a powerful anti-fraud detection tool, and again as a powerful tool against identity theft. Now, and I conclude my talk. I apologize if I took more minutes than I anticipated to. What is the upshot of this talk is that AI needs to be developed and implemented ASAP as a secure AI development, deep tech AI control systems, AML and anti-fraud monitoring for banks and digital money, AI in dark web crime prevention, monitoring and defense, AI against deep fakes and identity theft, and AI against financial terrorism and financial warfare. Thank you very much.
Thank you very much. From our side, it was quite comprehensive lecture. I am just wondering, since you have a dog, are you a fan of Dogecoin or Dogecoin? What is the exact pronunciation?
Well, I have no cryptocurrencies that are my friends. I only have blockchain architecture that I trust slightly more than others.
Yeah, this is a very, very good answer in the context. Well, thank you once again. It was a great comprehensive presentation. Now, I would like the speakers that are to continue in this room. They can stay there with their microphones and cameras switched off. And when the time comes, the moderator of the room will give start of the next show, which is about, I think, 30 minutes, but I do not have the program in front of me.
That's so I apologize for interrupting. Yes. Just a very short note, because I'm entering an intelligence service robots talk in virtually minus 20 minutes. Now, if there are some questions, I would love to answer them now, but unfortunately I have to exit because I have to talk in another.
You can continue with your next chores, and if there are any questions, we'll share your email and people will be able to write directly.
Sure. Please do. Okay. Thank you very much for the invitation.
Bye, Boris.
Quatsch hier, Headset brauche ich einfach nur so zu machen. Ja, ist klar, gut. Hallo, hallo? Ah ja, gut, wunderbar, okay.
Hi, I'm looking really funny, but this is because of some sort of glitch in the system.
Okay, yes. You know, I'm really sorry for the mistakes that was, or some disturbing moments that we had yesterday. I was at home, you know, and
Yes,
today I'm in our office. So this was simply, that is why I was not at all prepared. Quite a, oh my God, yes, yeah, it's so hard.
Christian, believe me, it is nothing compared to what we are experiencing today. Because,
Okay. Okay.
They, as I mentioned, the event is set up here in Sofia. We are partnering with co-developer in Belgrade, in Serbia.
Mm-hmm.
And nobody knows from where goes the signal actually, because it's streamed in YouTube and in Zoom. So
yes.
probably the signal is going somewhere to the east coast of the United States, or
yes, of course.
Almost. So we are now just waiting for.
Mm-hmm.
I even will switch my video off because it's ridiculous.
Yes. Okay. No, it's not ridiculous, but it's okay. That's what I want to say.
Yeah. Okay. I'll just check the other two guys, see they're entering soon.
Yes.
Hi, Martin. Can you hear me?
Hey, can you hear me?
Yes, great. Okay, you're online, and now we're waiting for Olivia.
Hi, Martin. I can hear you too.
Great.
Hi, Christian.
You are in Brussels, if I may ask?
No. I'm 20 kilometers south at my home.
Okay. Yes.
Yeah,
Yes.
but our organization is based in Brussels.
Yes.
Sorry,
Yes.
I actually brought my food upstairs because I didn't have time to eat between 2 meetings. So
No problem.
crazy times.
Yeah, and if I may ask again, you have a very German name, but you are Belgian, yeah? Or is that right?
So my father is American,
Okay.
and all Americans somewhere down the line. So I'm aware that it's a German roots, definitely.
Yeah,
And
because
in fact, some people walk up to me and speak German, and I'm like, oh, sorry. Sorry.
no, Schmalzried, that as we would say in German, that is sounds very, because there is a small part in Belgium which where is a German minority, just at the front.
Yeah, indeed.
And actually, is there any meaning to Schmalzried?
No.
Well, schmaltz is like this grease or something, and riet is like apparently a small, not a river, but like a small thing. Right?
Yeah,
But it's not. It doesn't make sense. Like combined together, it doesn't make.
Yeah.
Yes,
No. But Schmalz, it's more like butter, huh? It's kind of butter, something between butter exactly. And margarine, yeah, la margarine.
Yeah,
and riet, it's a kind of meadow, of wild meadow, wild meadow. So this, you are right. Together, it does not make any sense.
Yeah,
because I remember once upon a time, me and Oliver were trying to trace down his name, the roots of his name, and Jerusalem.
Yes.
It comes from Jerusalem, actually.
Okay, it's not not very astonishing. Huh?
Yeah, but unfortunately, the bearer of the name is not online yet. So I'll try to reach him through mobile. I'm just muting for a while.
And which part of America, if do you come from? From East Coast, West
Pennsylvania.
Coast? Pennsylvania.
Yeah.
Okay.
Yeah, West Coast, Pennsylvania.
Okay. Now I've been twice to the United States, of course, as every European in New York City, several days, and then the second time it was in Chicago. So that was a town which I liked very much. About 10 years ago now, and it was very impressive. Yes. Not just because of the high buildings, the skyscrapers, but for example, we went to the Museum of Science and Industry, or Shed Aquarium, things like that. That was very good, excellent.
Yeah, I only actually visited DC and New York myself.
So. Okay, so then you lived all the time in Europe.
Yeah, I lived all the time in Europe. Yeah. I only went there like for a year to study university, but then I realized it was not a very good level and too expensive.
Okay, yes, okay, I see.
So guys, perhaps we should wait, let's say, a couple of more minutes, and then Christian, you can start with your presentation, and hopefully Oliver will join a little bit later.
Yeah, just tell what it is.
Let's say just a couple of 2 or 3 minutes, and I'll give you the start. Well, I'm trying to reach Oliver, but I think Christian, you can start your presentation, and hopefully he'll catch up later on.
Okay, so now I will. Okay, I will put here. Just one question: when I put on my here now the PowerPoint presentation, then the video will be.
The presentation. You can.
Yeah. Okay, I will now. The screen, huh? I will.
Yeah, start your presentation in full screen.
Yes,
then
exactly.
Go to Zoom and share the screen.
Is it okay now?
I'm afraid not. You're not sharing actually the screen.
Ah, yes. Okay. So,
the green button in the middle of the screen.
maybe
now you're
yet.
sharing it. Yeah, now you're sharing it. I think it's quite well.
It's okay now?
It's great. It's great now.
And you don't see me. You just see the screen, my presentation, yes?
I see you. No, I see you, but in a little box besides the
okay, okay, I see.
So it's working.
So I shall begin now?
Yeah, and we mute ourselves.
Okay, thank you. Ladies and gentlemen, dear audience, my name is Christian Gülich. I'm the representative of the German Association of Insured. Our association is an NGO with about 45,000 individual members all over in Germany, with its headquarters in Hamburg. For an annual fee of 60 euros, our members get independent advice on all questions of private insurances, including judicial advice in case of problems with regard to indemnity claims. My task is to represent our association on the EU level. Hello? On the one hand, within Better Finance, and the European Association of Private Investors and Policyholders in Brussels, and on the other hand, on the so-called stakeholder group of European. Can you hear me?
Yes, I can hear you.
Okay, in my screen, do you see it? Because, oh, sorry.
Yes, I see the presentation. I see the presentation.
Do you see the presentation? Okay, sorry, because here
yes,
I have.
I do. Yeah.
My
it's
task.
The first slide. Yeah.
First slide. Okay. Yes, thank you. My task is to represent our association on the EU level. On the other hand, within Better Finance, the European Federation of Private Investors and Policyholders in Brussels. And on the other, in one of the so-called stakeholder groups of the European Supervisory Authority for Insurances and Occupational Pensions, EIOPA, in Frankfurt. Desislav and I know each other from these European institutions, and I sincerely appreciate being invited to this conference today. The subject for my presentation we have agreed upon is enhanced digitalization and advice on private retirement provision. The reason why I proposed this subject is quite simple. As probably we all know, there are two major impacts of the ongoing pandemic for insurers in Europe and even worldwide. Due to the measures of social distanciation, there is an enhanced digitalization as well of distribution procedures, as of contract administration and even of claims or indemnity management. And secondly, due to the economic impacts of the pandemic, there is a prolonged phase of low or even zero interest rates, which puts an enhanced pressure on the returns of life insurance products. Under these contradictory conditions, what are the chances for a takeoff of insurtechs in the sector of life insurances? Before answering to this question, I would like to clarify a possible misunderstanding. As far as I know, in contrast to most Balkan states, in the traditional markets of private insurances in Central and Western Europe, the sector of life insurances is much more important than the sector of car or motor insurances. Following to Insurance Europe, the Federation of European Insurers in Brussels, in 2019, The average spend per capita in Europe for motor insurance was 244 euro, but for life insurance, 1,163 euro. So life premiums in Europe in 2019 were in total at about 700 billion euro. Premiums for motor insurances were only at about 147 billion euro, so nearly 5 times less. These figures show why, in the long run, life insurances are much more important with regard to the gross written premiums than motor insurances. But as an independent broker or insurtech, you should not forget that life insurances are, of course, not the only product for private retirement provision. As a consumer organization, we always advocate that private retirement provision is predominantly a long-term saving process and less an insurance problem. That is why the saving or accumulation process should be kept as simple and cost-efficient as possible. For example, by using a standard saving plan of ETF, so-called exchange-traded funds. The only so-called biometric risk, which is linked to the retirement provision, is longevity. This means the life expectancy after having finished the professional life. In Germany, for example, the regular beginning of the state pensions starts at the age of 67. So you have to calculate an additional life expectancy of 25 to 30 years in order to be sure that your probable life experience does not exceed your savings. For this payout phase, there are various solutions. Life insurers offered lifelong annuities. Investment funds offer drawdown plans. Both offer one-off payouts. Any distributor, broker, or insurtech has the legal obligation to give best advice on these various options, as well for the contribution phase as for the payout phase. In consequence, a pension product which fulfills all these different requirements must be simple, transparent, and cost-efficient, as EIOPA stresses. Therefore, on the European level, another new regulation has been adopted for the launch of the pan-European pension product, the so-called PEP. There are 3 major advantages of the PEP. As an explicitly European product, the saver will be enabled to contribute to the same product even if later he will work in another country of the European Union. This is a so-called portability service. This may be interesting for workers from the Balkan countries, for example, who would like to get a job in a different European state. The second advantage is that there is an obligatory product standardization. Any product provider has to offer a so-called basic PEP. If a saver chooses this basic PEP, he just has to follow a predefined decision tree, and he will know what will be the kind and the projected amount of the future pension. Because of this obligatory product standardization, especially the basic PEP is convenient for pure online distribution. The basic PEP has an additional advantage of a cap of cost of 1% of the accumulated savings per year. In comparison to most insurance pension products, this cap of cost is quite moderate. But in comparison to pure ETF saving plans, unfortunately, it still is rather expensive, especially in the long-term perspective. As already pointed out, The first PEP shall be offered to customers from 2021 on. Therefore, it is very interesting to look for any pension products which already exist and which may be a model for a future PEP. In Germany, there are more than 50 life insurers which offer all kinds of life insurances and pension products, from classical guarantees to unit-linked or hybrid products. The biggest company is Allianz in Munich, as you may know, and they offer only for private pensions at least 12 products, not taking into consideration occupational pensions. The newest pension product, which Allianz has launched last September, Alvest, has two particular characteristics: pure online distribution and rather low investment costs by using mainly ETFs. Surely, of course, you will find other possible candidates for PEP by making an online research on pension plans of other European product providers. Unfortunately, we can observe in a traditional insurance market like Germany that the established insurers and distributors more or less refuse to promote the new PEP, mainly due to the cap of costs. Therefore, for insurtechs, there is a real chance to attract new customers by a new product and by an innovative way of online advice. That is why I would like to give you one example of an insurtech which is focused on the future PEP as a major tool for private retirement provision. It is based in Berlin and its name is Vantig. Its website is bilingual, German and English, and there you will find all the necessary information how to give advice and to proceed contract conclusion exclusively on an online basis. So my conclusions are the following. Look at EIOPA's website for detailed information on the PEP requirements. Look at Vantig's website as an example for an insurtech specialized on private retirement provision. And remember that, of course, insurtechs are in a very harsh competition with traditional distributors in all financial sectors, private insurances and retail investments. But the enhanced digitalization creates several crucial advantages: broad range of target groups of possible customers, low costs by product standardization, and better returns for customers by offering ongoing product innovation. Thank you for listening. Sorry, I just have to leave now. There is a problem.
Desislav, are you taking over? Okay. Christian, you're back? If it doesn't work, actually, maybe Olivier, I don't know if you have a presentation. Are you there, Olivier?
Olivier, I believe he's not presenting. I think he's just participating in our panel. I think I'm the second one.
Okay.
No, well, hello, everyone. Yes, I do have prepared a PowerPoint I sent to you, but I don't know if you received it. Otherwise, I can just open the one on my computer and share the.
Yeah, you can start your computer and share your screen. Just put it in a full screen mode.
Okay, I will do. So is it my would say
No, Christian has to stop sharing his screen.
Yes,
Okay.
please, sir. Okay, sorry, there was a problem here on mine.
No, it's gone. It's okay. It's okay. Now, Olivia, you can start.
Okay, let me just a second.
Of course.
Time for me to. This is it. Because I'm on two screen and I always have some issues with two screen sharing when.
No, you know.
We have this kind. Sorry for that. I just now find
digitalization is bringing forward a lot of challenges for normal people. Believe me.
If you say so, sorry for that. Yes, that's it. Okay, now I got my PowerPoint here. Yeah, should be ready in a second. Yeah. Okay. Okay, so I'm going to share. Yes, this is this one. Is it this one? I hope it will work. You let me know. Yep. Do you see properly the PowerPoint?
Yes, it's working, and I believe you can start now.
Okay, thank you, thank you, thank you, Desislav. Thank you all for the invitation. My short presentation this afternoon will be.
Olivier, we can't hear you. Still nothing. Did you do something with your microphone?
Does it work better?
Yes, perfect. I can hear you now.
Okay, okay. Happy now. Everything is fixed. Okay, so the idea was to present to you the perspective from a consumer who is looking for the product he might need to live a normal life. So my presentation is let's say structured on four small dimensions. One is about insurance and inclusion, and I want to present to you what means financial inclusion in the field of insurance. Then let's say presenting to you what we consider, what is being considered as the necessary insurance nowadays in our society. Then I will present to you not all of the issues and content, but at least, in my view, the key elements that maybe put people with higher risk profile at risk of not getting access to affordable product. And then we'll present to you shortly some recommendation for hopefully finding some solution to these issue. Maybe some of you knows already quite well what is financial inclusion, but it's not as such so well known, let's say, concept. So the idea mainly about financial inclusion is about the possibility for everyone to have access and to use the products that they consider necessary to live a normal life and a simple life in the society. It means that, of course, from a country to another, the consumption, I would say, standards are not the same, so they might differ from a country to another. But the exercise is mainly to say, okay, nowadays in a life when you don't access some financial product, of course, here let's say in insurance, it might be a bit less, let's say, visible than in some other financial services. I think about, let's say, payment account that become very much necessary for daily life, and in some case some credits. But insurance is becoming more and more used and is really becoming, let's say, as part of a daily life. And we consider now that insurance as well do have some products that are very much necessary to live a normal life. Simple life, it means that the product that you should access should be easy to use, easy to identify, and not creating issues when using them. Why we consider and why we think that insurance can become a necessary product nowadays. Mainly it's for the following reason, even if they are not all, let's say, mentioned, but it's about getting some protection against poverty, homelessness, if you lose your property, if you, let's say, are liable for accident that leads you to very high, let's say, penalties that leads you to poverty, for example, because of lacking any protection, then you are exposed to a risk of becoming poor and over-indebted. It's also questions of guaranteeing the access to healthcare, because you will be able to pay the cost of this healthcare, and notably because you have an insurance. Maintaining a high level of mobility is very important, and in some region, not having access to a car in particular can really create some let's say, vulnerability as regard reduction of employability, and also as regard, let's say, a minimum standard of living. When you are family with children with no car in a rural area, you are very much restricted in your choices. In other, let's say, another range of reasons are also about the legal requirements. We know that motor insurance is an obligation, and it's an EU directive who is ruling that. And in more and more, let's say, situation, the obligation, the requirement is based on contract. And we think, for example, in some countries, getting access to a let's say, home insurance when you access to a mortgage credit is already an obligation by contract. In other case, landlords are requiring some home insurance as well for the tenant. So what are the product on which I would say there is more or less, for the time being, a kind of consensus and a common view, not only from consumers protection organization, but also from the industry. And we can say more or less, it's not an official consensus, but the 4 products presented here are more or less, let's say, considered by not only consumers, but also insurance firms as becoming very much necessary to live a normal life, which is the motor insurance already mentioned because of the legal obligation. These household and home insurance because of these high protective effects on risk of poverty and homelessness. These third party liability insurance, which is also bringing a quite high level of protection against life accidents and financial, let's say, consequences. And then we mentioned the health insurance, the private one, which means the one that sometimes is necessary to complement the public health scheme that might be in some countries rather insufficient. And I think, for example, to cover hospital expenditures or some, let's say, complementary treatment that are not covered by the public scheme. Here, I think it is important to mention more or less one of the key element of competition that in my view, is at the root cause of this risk of not having access of affordable insurance for higher risk profile. Let's say that the risk-based pricing includes different type of risks, and it's not only the claim history, which I and other consumer protection organizations consider it's definitely the fairer, let's say, rating factor for assessing the risk. But we observe, and of course, the digital evolution and will bring much more capacity for insurance company to, let's say, access particular risk assessment from personal attributes. So I try to range them mainly on attributes that are attached to identity. So identity is about the age of the persons, the address, the gender, the marital status, potentially the professional status. Those are elements on which people might not have, let's say, a direct impact, and or they just, it's really part of their own identity, they can't change it. And other kind of attributes can be more, let's say, considered as being attached to behavior. And we know that the Internet of Things and the connected car can have a view on your driving style, for example. For health insurance, there is a more and more interest on checking if you smoke or drink, if you have some sport habits, or all these elements that have an influence of your lifestyle. But not only these kind of, let's say, quite intuitive and immediate, I wouldn't say causal connection with the risk, because causality remains quite a challenging notion. But there are also different kind of other let's say, type of behavioral attributes that are checked by financial and insurance companies. And for example, you might be considered on the way you browse on the web. And if you are comparing price of the insurance premium, you might be checked also about the type of devices you are using, or the way you're going to pay on internet. And maybe also insurance company might be willing to access your credit scoring. So this credit scoring, for example, might make some correlation between the way you manage your budget and the way you driving, or your capacity to maybe to pay on time the premium, or even the probability you might be willing to make any fraud because you have financial issues. This is the way potentially insurance might be looking to your behavior. So what is the mechanism of this insurance competition that does not benefit to higher risk profile? Usually, what we observe is that because of these so-called risk-based pricing, the insurance company are looking to attract lower risk. And so they are looking really to be able to identify among the potential clients, customers, the ones that are going to have a lower risk. Because on this particular section of the clients, they will make more, would say, benefit, but they also will be able to propose to them maybe some lower price, which will attract more of these clients. So the idea is that the more you are attracting low risk profile, and in particular by using big data, AI, Internet of Things, the more you penalize. So the more you are attractive for the lower risk, the less you are attractive for the other ones. So the ones might be, let's say, pushed to look for an insurance in other companies that might be challenging to offer you, let's say, an insurance at a proper price, because the lower risk people might have left this company too. So it's a kind of vicious circle in which the more you look for the lower risk clients, the less you use these, let's say, increased profitability beneficial for the higher risk profile. It's not as if altogether, because some people are making allow a company to make more profit, it allows this company to make less profit on higher risk profile. This is not the way it works, because the market, there is no obligation for the companies to serve a larger amount of people, and in particular to guarantee services for higher risk people. This is the current situation. So the problem is in this situation, and I hope I will be clear. I have been clear, but do not hesitate to ask for clarification if it was not. This leads that for necessary product, the one I mentioned in the beginning of my presentation, it can be for higher risk profile, really becoming, let's say, really challenging to access affordable price. And we know that the price is an entry barrier to access some product, of course, and the necessary one in particular. So these are here, let's say, 4 recommendations that I hope would be helpful to let's say, correct a bit this tendency. The first one would be for the EDPB, so the authority of that data protection, let's say, regulation, to define what should be the data perimeters to be used for the risk assessment per the different kind of product in insurance. It's very important that the insurance company do use more or less the same type of data perimeters. It will allow maybe to stop this race that leads the company to try to access really sensitive data on personal data, and we consider that we should limit the risk assessment on some data perimeters that are really meaningful, causal, easy to control, easy to detect, and in order to stop this crazy race for more data. Then we consider that the insurance industry should propose basic insurance product in these at least minimum 4 necessary products we mentioned. What is a basic insurance product? It should be affordable, it should be easy to use for consumers, or consumer friendly, and also, of course, easy to identify within the market, because we consider also that the digital offer and marketing tools are not really making things easier for the consumer to identify which will be the best product for his situation. We also consider that companies should report annually to the competent authorities on the impact on this, let's say, inclusion level. Of course, for that, it is important to develop some key indicators that might be, let's say, designed by the European authority. And then, last but not least, I think one potentially of the most pragmatic and potentially the most efficient way for allowing consumers to access a good product, and also then to improve the competition in favor of consumers by the different insurance company, is to develop a consumer-friendly comparison website, but developed by public authorities, which is very important, because we should not have private interest behind a comparison website, first of all, and then public authorities are probably the only one to be able to guarantee that the market is covered by 100% of the offers. And we also consider that a price observatory is absolutely necessary to guarantee that competition leads to, let's say, appropriate offer for consumer. So I finish here my presentation, and I'm ready for responding to questions, but maybe later, I don't know how it will be organized, and I will quit the.
Okay, thank you very much, Oliver. Actually, there are no questions and answers here because we are in Zoom, and the main audience is in different platform,
Okay.
and Zoom is interconnected to this platform. So we
Okay.
do not have a genuine Q&A session.
Okay, okay, no problem.
Okay, if the other two panelists have any issues with your thoughts.
Yes, okay. Then I will start. I fully agree with what Olivier has said, mainly in 3 points. First, of course, I think you are absolutely right to insist on the necessity of independent comparison website. This is absolutely necessary, because all the comparison websites which exist right now are not really independent ones. They are offered by brokers, and in Germany we have made a lot of, or not only we, other organizations, consumer organizations as well, have made a lot of comparisons, and even some legal procedures against the comparison website, because they did not disclose the fact that they are brokers. So their comparisons are simply not full or not complete. They they work like a broker, and it is sure that they do not correspond to all products which are offered on the market. So this is a false comparison. The second point you have mentioned is the necessity of basic insurance product. This is what I tried to point out, to elucidate by product standardization, which is maybe or hopefully even possible now in the very complicated market for private retirement provision. But of course, for non-life insurance products, as you have said, especially for motor insurance or third-party liability insurance. These are basic products which every consumer needs, and therefore I think the basic product is an absolutely necessity. And the third point, which I agree, again, I fully agree with you, this is a question of use of big data, of artificial intelligence. What we call that the problem of the law of the big number. In fact, there must be a sufficient big risk pool in order to create sustainable tariffs. If the individualization of tariffs goes too far, then on the one hand, there are maybe some consumers which get very low tariffs, of course, and then they make profit. But the question, of course, then the counterreaction is that other consumers which do not correspond to these very low risk profiles, they have to pay much more even for the same kind of risk cover. So I think the only way how to solve this problem is that insurers may be allowed to reduce a little bit the tariff, the calculation of the tariffs, but there must be simply a limit. How much they can go on with this individualization of tariffs. Otherwise, the principle of insurance itself is questioned, and fundamentally questioned. This means this famous law of the big number. Thank you.
Thank you, Christian. This is a very good observation, and I just want to enter with my presentation just to highlight the feeling of mess that is going upon us from the insurance sector. My presentation is actually dedicated to the open insurance question, whatever this may mean, and I'll try to start it now. Do you see the presentation now?
Yes, I do.
We see it. Yeah.
Okay, yes, great. Yeah. So those are just some basic slides that are going according to one short position paper that we developed in Fintechguardian, and it's about the open insurance and the potential risks and benefits it could bring to the overall population of insured people. And to our opinion, for the moment, the perils are much outweighing the benefits of it. Of course, from an industry perspective, probably the things look different, but from consumers' perspective, we feel that something is not exactly right here. Just to see how it will go. For one reason or another, it's not changing slides. Sorry. So, what is the situation presently? We have, let's say, two distinctive groups of insurance companies and insurance-related businesses. Some of them are in a very good shape. They are somehow future-prone, and they are able to adopt all type of challenges that our digitalization is bringing forward. And there are, of course, other that are not in a so good shape, especially in, let's say, the periphery of Europe. I don't want to go into country-specific details, but I think people understand what I mean. So our problem is not the first group, our problem is the second one. And where the things start to get funny. The European Commission, according to its data strategy and digital finance strategy and capital market unions, which in paper look very bright, very good, very future-oriented, somehow is trying to open the gates and to airbrush all the existing boundaries in the financial sector. Of course, this could create a lot of opportunities. This could create a lot of new working roles, working places. It could create a huge wave of employment, future employment. But one must take it with grano salis, cum grano salis, as it's said, because that type of employment will require totally new set of skills from the people that are there. And we are not very sure that those people are still present at the market, especially the labor market. The other part is that this type of interconnectedness, as you can judge even by our event today, creates a lot of gray areas. And in those gray areas is the interesting part, especially if you take into account that many players on the market are beneficial to the consumers. They do not want to harm their consumers, but there are also others. And those others create a huge peril. I'm focused on those companies that are putting the profit and that do not care much about what's going on with the consumers. And this is not only one or two companies, it's a huge market segment, I'm afraid. So with that actions of at the European level, although they look pretty well, at least in paper, I believe, and not only I believe, but I think this is a general notion that in the insurance sector, the mess will get even bigger than the one that is presently existing. At national level, Open Insurance Initiative has also very different degrees of adoption. There is interesting facts that could be observed. For example, at level of national insurance markets, where there are companies with headquarters somewhere in the Western Europe, the so-called more mature Europe, those companies are more well prepared to the requirements and the challenges of open insurance, while the native companies still even lack basic ideas what is this open insurance all about. And here is the issue, and unfortunately this issue is not some strange thoughts of people that are too afraid of the future, but it's coming from the discussion paper of EIOPA. And in the first sentence, you can see that there is no uniform definition of open insurance or open finance, nor is there sufficient settled academic or expert literature on this, as these developments are relatively new. And I think this line says everything. Even the reference framework for open insurance is still not developed, not to mention the fact that there are huge amount of mismatches that exist in the insurance market, and that they will be multiplied by the adoption of the open insurance concept. Some advocates of this concept refer to the open banking and how well it was introduced by the banks. But one should always think of one issue. With banking, we have financial transactions that, although they can have different patterns, but in general they are running at the same level, at the same plane. And this plane is transfer of money, transfer of wealth in a way. While with insurance, you can have all type of risks and all type of insurances that are trying to address those risks. And opening the gates, it means to allow companies that have not been experienced in insurance, that even are not regulated properly or regulated at all, to have access to insurance data, private data, starting from health insurance, going to cyber risk insurance, household in the middle. So it's a huge amount of totally different details that with the concept of open insurance has to be given access to third parties. And we believe that this is a huge issue, and it has a potential for much bigger harm that is originally expected. Especially if you put into the equation, for example, a report of one of the biggest investigative companies in the States, published just a couple of days ago, about 17,000% increase in ID theft in the United States, 17,000% since the pandemic, since the beginning of the pandemic. And you can say that the market in the United States is not so poorly regulated. I mean, there is a lot of tools to address those issues, and there are a lot of they even have history of dealing with those type of problems. While here in Europe, ID theft is pretty much new concept in, let's say, half of the continent. So open insurance is again opening the gates in front of barbaric hordes. This is the incumbent answer, especially of those companies that do not use some external help. As I mentioned, those of them that have headquarters in old Europe, they are a little bit more prepared to what's going on. While the local insurance companies, they're trying to use the elevator in times of siege. And I think this picture very well answers to what they are doing. Of course, the barbarians on the other side of the wall. I don't know if you can see the line between the cartoon, but in general, it says, okay, we had this issue during our preparation, of course, or during our education, but those issues cannot be addressed well stepping only on your education. I mean, those issues could hardly be addressed without experience and real-time, real-world knowledge. And I'm not very sure that the third parties that are trying to gain access to information that is currently kept within the walls of the incumbent insurers are ready to use it in a proper way to prevent any possible harms to the consumers, and to actually to create benefits for the consumers, not to create issues with them. Especially one should point out, for example, the issue with smaller venture capital fueled companies that are doing all type of data juggling just in order to extract the value from this data. The moment you cut their venture capital umbilical cord, they start to bleed, and they are not prepared how to preserve the information that they have gained access to, how to use their models without financing, without centralized financing. And it's not an implausible scenario to see such a company to go rogue and to try to benefit in not a proper way, for example, reselling their data that they have gained access to, or reselling their models to not very legitimate buyers, to put it mildly, because there is such thing that is called darknet, and in the darknet, believe me, you can find everything that you are interested in, and insurance information is even not so interesting for the darknet, but you can find it there as well. So I think the open insurance, if not addressed properly, will create a huge additional segment of the darknet market very soon. What could go wrong? I think I already addressed this problem. Almost everything could go wrong. Almost everything could go wrong, starting from the disgruntled system administrator in a startup that has not received his paycheck for a couple of months because the venture capital guy has stopped his financing. So he decides to make some extra cash selling your data to somebody else, although it's illegal. But you can always make this this arbitrage weighting the what is the punishment for this and what is the benefit for you. And especially if you are somewhere outside the core of Europe, where you have much more lax regulations and stuff, why not use the darknet for a profit? Also, many companies use third-party services. They use outsourcing. I know that there is certain regulations that is addressing those issues with outsourcing, but it still creates problems, because you outsource something to somebody and then it could be re-outsourced to another company somewhere else in the world. Although the initial outsourcing company is still bearing the culpa in eligendo, so they are put into position to respond for negligence in case they have not selected the proper outsourcing company for their outsourcing process. In any case, this could be issue, and this is just one of the issues that could be created by open insurance. How to solve it? For incumbents, for entrants, and for regulators, they all has to adapt to the digital age, because this I cannot stop repeating this. All companies, and especially the insurance companies, are software companies nowadays. Some of them perhaps still have the notion that they are operating in their traditional environment, but I believe this is not the case. So they have to adapt to the digital challenges and to be able to create new mechanisms for consumer protection at all type of levels. Also, this is an issue for the regulatory bodies, because many of them just lack digital capacity. They lack the skills, the toolbox that is required to be able to oversee in a proper way an insurtech company. If you take, for example, insurtech company, traditional insurance company that is totally digitalized, and there are examples in that direction. For example, not Baidu, sorry, I forgot the name, but it's a company in China. I even think it's part of Tencent holding. This company actually has no physical offices. They are entirely present only in the internet. You can interact with them only with some type of internet tool. And I hardly believe that present insurance supervision architecture in Europe allows many of the supervisors to address such a company in a proper way. Not to mention, I just don't want to go into details about this or that, or how the Chinese regulator is overseeing and not editing, but making due diligence to the software that the insurance companies are using, just to see if the results that are produced from there are the proper ones. But this is a detail, and I don't want to go in that direction. So in general, this is sort of a wrap-up of our position on the open insurance. We believe it will be beneficial in a long run, or let's say the mid-term run, but in a short run, it could be pretty much dangerous for the whole insurance community. And that's my presentation. I'm stopping the share here. And any reactions from your side?
okay if if nobody else. I just would like to, yeah, again, I fully agree with you have with what you have said, Disislav. I just would like to point out that in Germany, just a few weeks ago, we had a very strong discussion about the role and the task of our national supervisory authority, because the authority clearly stated to the new insurtechs that their capital requirements must be as strong or as strict as for all the other insurers. This means they have to follow the rules of Solvency II. And okay, if they are beyond it, then it's a little bit, because this is a question of proportionality, but they have to follow these rules. And the National Competent Authority clearly stated that for the capital requirements, in order to give or to guarantee the constant risk cover for which the customers have paid, for this, it is not sufficient just to ask, as you have said, for venture capital on the financial markets. Yeah, there must be a solid basis for a constant risk coverage, and this can be done only in the framework of Solvency II, or with all its proportionality. And so one has to make the difference between what in Britain I think is called the so-called regulatory sandboxes for new business models, but this does not mean that the strong economic support this strong economic support does not or must not be missed. And there is a recent study, just in order to finish, that in Germany we have about more than 180 companies which could be classified as insurtechs. Yes, and there is a clear tendency that they, following to this study, yes, by one of the consultant companies, that they more and more become, in fact, providers for technical solutions for the insurers, and that those who make really a business like a broker, like a normal, usual insurance broker, they are still in minority. So I think that is something which is very interesting.
Yes. I really would start with your basic concept that the regulator is again addressing the insurtech issues in the old way. I mean, it's focusing on capital adequacy and stuff. Well, here the main issue is not actually the capital. Probably those companies will have their capital in a way. This will create some sort of tranquility within the regulator. But their main problem is that, first of all, with open insurance, the idea is to have the whole insurance value chain segmented one way or another. And third parties may start doing business with those segments of the insurance. But also the regulator is not addressing, I think, the main issue. Everybody's saying that the data is the new gold. And do they somehow account for these goals? I believe not. Do they have proper software, but not only software, even hardware? What they do in respect of providing guarantees that the employed software and hardware solutions are a good one, because from our side we are plain users, we are, let's say, not so well computerly literate guys, and from our side something is working well, it's okay, but so what's on the back end, we have no idea. So there must be somebody who says, okay, I checked also the back end and this software solution is a good one, or this is not a good one, or this is developed in third party, nobody knows where, and this is a huge issue, especially if you take into the equation the modern software, because it's comprised of many smaller parts, and those smaller parts could be developed everywhere. And usually the developers are using standardized libraries, software libraries. They do not code by their own, so they take parts from here, from there, they just mold up something and they push it forward. And this, I believe, is one of the biggest issues with the insurtech development nowadays, and with the open insurance in particular. So maybe Martin and Oliver could reflect on that.
Yeah, can I come in maybe?
Yeah, of course.
Yeah, I just wanted well, I'll address maybe, I don't know if this is open insurance, but I'll go a bit on the decentralization and blockchain side and smart contracts. But I just wanted to come back on the law of big numbers, as Christian was referring to. I think in overall, basically, insurance makes sense for non-foreseeable risks, so-called accidents, which truly happen by chance. And even though there is this tendency now to use vocabulary which may suggest that people can lower their risk by doing this or that, which is, of course, it's not bad per se that people, for instance, eat more healthy or do preventive, exercises to have better health. But overall, insurance is for non-foreseeable risk. If you're going down the individual risk-based pricing, and you're actually starting to insure for a foreseeable risk, because that's the claim. That is, if you have enough data, then you can actually foresee a risk, and then you can price it accurately. Whereas non-foreseeable risk is that you just do a blanket insurance across millions and millions of people because you're unable to extract from that pool people that are more or less risky. If you go down the individual risk pricing route, then it actually doesn't make sense at the end, because then people can just self-insure. Basically, the only reason why you need insurance is if you go down an individual risk-based pricing is for the first few years where you didn't set aside enough money to actually have a pool of money that is large enough in case you have an accident or a problem in the first few years. But after the first few years, when you've set enough money aside, actually you can just self-insure. You can have an algorithm, an open source algorithm that analyzes your data just as well as any other algorithm, that looks at your own data, whether it's health or accidents or whatever, and then just tells you, okay, this is how likely it is that you'll have an accident in the next X years. And after 3 or 4 years of setting money aside, actually, you don't even need to be in a pool anymore, because the chances are that the chances that your pool of money that you set aside is going to go to zero is negligible. And that would be a very dystopian future in a way. It's because it would basically mean that people would only insure and mutualize or socialize risk within very small risk pools for a few years. And then once they have enough money saved up, they just exit the risk pool and say, screw the collective. I'll just cover my own risk on my own. And that is now possible because ultimately, I think there's a big debate, especially with the open insurance and decentralized insurance. There's a whole question about who does data belong to, because that's ultimately what is really needed. Of course, for large-scale socialization of risk, the data that you need is rather small. All you need to know, for instance, is how many accidents on average, in aggregate, you have in a certain country, for instance, and then just spread the risk evenly and you have your price. But if you go down the individual risk-based pricing, then you need really granular data. Like, for instance, is that driver, how many times have he been caught drinking and driving? How well is he driving? How hard does he push on the brake and all that stuff? And ultimately, that kind of data, arguably, if you look at the GDPR, that data belongs to the person that generated that data. So the individual, which means that ultimately, if millions of users ask for data portability rights on that kind of data that is being collected about them, they can very easily just let an open source algorithm and a decentralized insurance with no third parties involved get them a price for being insured. And that will cost them much less than the current centralized solutions, because of course insurers have staff costs, branches costs. I mean, all that costs a lot of money to have all that staff. And we would go towards a world where you just have bounty hunters, basically. Like if at some certain point the state issues a recognition, official recognition to certain bounty hunters to weed out insurance fraud and false claims, that's all you basically need. Just an open source protocol, decentralized insurance, open data, and then these bounty hunters to make sure that people are kept in check and don't submit false claims or commit insurance fraud. Now, I'm not very enthusiastic about that future, but I think it's basically now the insurance business, the current incumbents have that choice. Either they sort of coalesce with consumer organizations and civil society like ourselves, like Olivier, like Desislav, and they agreed that socialization of risk is what they want to uphold to have, at least a certain standard in insurance for everyone, for the most basic insurance products like Olivier underlined. Or if they fail to do that, I'm afraid that they'll just basically they'll saw the branch that they're sitting on, because they will enable the emergence of these decentralized alternatives, which will be inevitably cheaper because they won't have that third-party intermediary costs. Now, to finish, I just wanted to sort of throw a stone in the pond a bit here and be provocative. All of that we're discussing here is based on the assumption that over the next 5 to 10 years, we are going to be in a form of stasis. Well, everything sort of stays the same. We have about 0.5% growth, maybe less or more, and the financial system is fine and everything. But let me just tell you that in countries like Venezuela, for instance, where you have rampant inflation or hyperinflation, the insurance business is not doing too well. And so all of that we're discussing here, the stability of the insurance products and all that for the future, is based on the assumption that we're going to have monetary and financial stability, which is becoming less and less sort of clear. And, you have examples of things going wrong, for instance, in the US with underfunded pensions in certain states, where they cut your pension, that your pension is simply slashed. So just how resilient are our public and private insurance and pension schemes in the event that we have another third wave or fourth wave of coronavirus, or if the stock market loses 80% of its value? All of these things are potential things that can happen in the future, and we need to think very carefully of what happens then. And obviously then decentralized alternatives may be something that will emerge as well due to this kind of instability, because ultimately there is nothing, it's not as vulnerable, basically, because you don't have all that problem with reserve ratios and all that. It's just a vulnerability based on the quality of the code and loopholes and bad programming, basically. But other than that, it runs automatically. There is no way that you can be underfunded or overfunded. Everything is transparent. So it's code is law, as you say, in the decentralized community. And so I really look forward to how that will sort of evolve over the next 5 to 10 years, especially if we have wild fluctuations in financial stability. So that's.
Well, I believe this is a very good point, because all our assumptions are really based on the ceteris paribus, and we live in a pretty much turbulent times, and actually nobody can give any viable hint about the future and the future development. So let's hope it's a bright future, although I do not see too many points in that direction. What I was just I wanted to add to your words is that the basic position of our organization always has been that since the data is the new gold, and this gold is actually mined by somebody, but it's created by the user. So the user, first, it's property of the user, and secondly, the user has to be reimbursed in one way or another for using this new gold. And I have heard many voices that actually his reimbursement is in kind, because when his data is used, he's receiving much more tailor-made products for not only in insurance, but in any type of data-driven businesses. But I'm not very sure that this is the only way out. And even a small, not negligible, but a small payment towards the user when somebody is using his data, I think it's pretty much a good concept, especially from a consumer point of view. So, what is your positions in that direction?
Do you allow me to enter here on this
Yes,
point?
yes, of course.
Yes. Well, it's not precisely this one, but I wanted to go back. In fact, even if maybe we are not going to be there anymore, insurance company are not going to be there anymore within the next 2 decades, whatever. Nowadays, we still have some right from that came from the GDPR, and when we were thinking about the issues encountered by consumers and the personal data, I think there is one or two elements on which we should build some let's say stronger protection, and maybe also we have to learn how to use the GDPR to make it more effective. And these are one or two ideas. The first one is about the consent. As you know, data access, in particular personal data, or even the one related to protected attributes, is always related to a consent that is given by the consumer. And then here, I think there is an element on which we have to work, and we have to force firm not to make that providing data or giving the consent to access data is not a consent, but it's a requirement to access the product. Because if it's a requirement, it's not a consent, it's a condition. And here we can't speak anymore about a consent. So to keep the consent possible, you need to still have access to a product when you are not providing your consent to access personal data. So this is the first element. And this is why, in my view, basic financial services, if the offer is guaranteed on the market, they should be made also available for people who are not generating data because they are not using such device for whatever reason, and it can be poverty or at least vulnerability. But also people who do use such devices but are not willing to share the data, or the one they consider not relevant or whatever unfair to give access to insurance company. So this notion of consent, is my view, is a very legal one, but is a strong one on which we should, the consumer protection, but also the regulator, should invest a bit more, because in my view, for the time being, consent is not properly treated in the let's say in the relation between customers and insurance company. And then the second one, and I will finish after the second one, is about the notion that you have in the GDPR on the fact that the personal data should be accessible only if they are necessary for the conclusion of a contract. And all of a sudden, we hear insurance company considering that having access to credit scoring data is a necessary one. But well, 10 years ago, no credit scoring the database access, and you observe, let's say, a growing insurance market. So you access to product at that time without providing credit scoring information, for example. So more and more, I would say the narrative from insurance company is it's not possible to finalize a contract if we are not accessing these new data, but it is. So here again, I think we need to develop a counter narrative to prove that on the basis of some certain limited perimeters of data, that might include some personal data. I'm not against that on principle, but it should be enough for a company to make its business, and should be the necessary data, and the minimization of the data collection should be implemented by this new principle, I would say. Thank you.
Thank you, Olivier. I somehow agree with your position, because allowing people to use some service only when they provide their data is not a good idea in any case. And although this is labeled as a consensual use of data, there is not much consent in it. Well, are there any questions in respect to the presentations on stuff, or you want to comment something?
Maybe I just wanted to quickly rebound on what Olivier is just said. I think that we can agree that basically we wanted the legislator to define clearly what is the data strictly necessary depending on the different insurance product, rather than having, I mean, Christian solution is also a nice one, basically setting a floor on how low you can go with your products. But I think we prefer the solution where the legislator says, okay, so for a motor insurance, this is the data that is strictly necessary to be able to provide an insurance contract. And you know, how hard you you press on the brake pedal may not be a strictly necessary data point, which means that you know, I mean, it's like by restricting the data basically that insurers can use, it's almost as if they're forced to socialize or mutualize the risk, because they cannot go granular enough to identify or penalize those who you know, those data points would sort of extract from a certain pool. So it grows the pool. It artificially forces socializations of risk. And so this is the strategy, I think, that or the road that we would prefer to go on, is like make a list of all of the essential insurance products and then define the list that society basically agrees to democratically, saying, okay, for instance, for each risk, what should we socialize health costs for, you know, smokers and lung cancer? And that is ultimately, it shouldn't be the private market that makes those decisions and prices automatically people out of insurance. It should be a societal, democratically chosen sort of decision saying, okay, how far do we allow people to be risky, to have risky behavior that they know is detrimental, for instance, and they still engage in it. And you still want to have this kind of element of solidarity where, you know, even if, for instance, somebody goes skiing 2 or 3 times more than their neighbor, and they have a higher chance of breaking their leg, you're not going to start penalizing them because they live a little bit slightly more risky lifestyle. And I think that kind of decision should be a societal decision and a democratic decision, and not something left to the market. So I don't know if
I believe this is a very good point, because people have different lives, and just separating the righteous lives against the not so righteous ones is a bad idea, I think.
Okay, if I may just step in, I more or less agree with what has been said right now, especially with the problem of the stress which has been made on the fact that we have to keep a consent on the necessary or the minimum data which are collected. But I think, yes, I see it a little bit different maybe than Martin. I'm not so optimistic with regard to the, let's say, the the self-ruling process of society, or of even of democratic or basic small companies. What you have said, especially in a period when, as you have pointed out, that there is a very, very strong inflation, or that there is a stock market crash. In fact, you have described a situation in which we have more or less a general loss of confidence in the structures of the financial markets. And I think in such a situation, if we really have this very strong negative general situation for the financial institutions, I personally, I clearly think that that the big players which exist now, the incumbents, as it was said, nevertheless, I would have more confidence in these big players which exist already now than in the small ones which can be controlled even much less. If I have understood you correctly, it sounds to me a little bit like Bitcoin, Bitcoin for the money market, yeah. And okay, right now this seems to be a very variable investment, but nobody knows. If we will have a digital euro, then Bitcoin maybe will drop again very strongly, I think. So the point is, who makes the control, yeah, in order to keep that consent about, I think we all agree upon. And I do not see who else than the state, or especially the competent authorities. Of course, if they really work, if they really look at the legal compliance, the good governance, the risk management that all the small or the big companies have to do. So yes, for that, I'm a little bit pessimistic. I think we need still, especially in a situation where we have a very difficult general financial market situation, then we need a strong control, and this control can only be made executed by a state or its representatives. This means competent competent supervisory authorities, because otherwise yeah, I think it is simply anarchy. And or what you have said, we have Desislav has talked about the dark net. Yeah, I think and this will be the solution. I'm pessimistic for that.
I do share your pessimism, I'm afraid. So guys, it was a very great discussion actually, and I want to thank you all for participating in it. Now we have to close to give our Serbian colleagues to 5 minutes just to prepare the movie of Martin that we want to run as a sort of finishing the bottom line of our event, because I think it should be seen. And again, thank you very much for everything. You can stay in the room to enjoy the movie, I believe, or probably if there are some technical issues, you can enter the audience platform on the other side. But I believe if you stay in the room, it will be okay.
Mm-hmm.
Thank you very much.
Yeah, thank you very much. This is
thank you.
Okay,
to you all.
thank you.
Yeah.
Bye from my side.
Thank you. Thank you.
Desislav, you're still there?
Yeah, I'm here.
Okay, we're waiting on the finishing of another panel.
No. Actually, we're streaming now your movie, but I have no idea why it's not going up here. Perhaps you should exit here and enter the system. I don't know if you have the address to enter. I sent it yesterday. It's BIS impacthub.rs.
Okay, I'll try to log in via that.
I believe the credentials are username, your mail, and the password is 128.
Okay.
Okay, I'm closing this now.